how much good can businesses do? Especially since the COVID-19 pandemic, it seems like one of people's favorite business words is ESG investing, environmental, social, and governance. It appears to be the cornerstone of responsible and sustainable investing. ESG is all about upholding and improving a company's capacity to produce value over the long term, and it seems to be gaining traction. According to a study, ESG was referenced in less than 1% of earnings call between 2005 to 2018. After the pandemic, it was referenced in about a fifth of earnings call by May 2021. So, ESG is about companies offering good risk adjusted returns by generating value for all stakeholders, be it employees, shareholders, customers, and the community. There will be both traditional financial indicators like earnings and cash flow, and also non financial components like human capital, social capital, and governance. It's said that ESG investments can make a difference without compromising performance with higher potential returns, boost shareholder value, and the ability to outperform competitors. All of that in theory sounds great, noble even. But do these ideals work in real life? Has ESG rhetoric met the reality? Because it seems to be under intense scrutiny. Questions are popping up, like divestment, for example. Let's say an investor is divesting to align their investment portfolios with ESG principles and values. Is someone else buying the investment? And that selling could make the price go down temporarily. So, would the buyer get it at a lower price? And if the price goes back up, do they then make a profit? And unfortunately, in ESG reporting, there doesn't seem to be a standard reporting method. There are companies for setting standards for rating systems for ESG. Some are performance based, others are disclosure based or risk based. Standardizing these ratings and algorithms through an ESG score is still taking time to be figured out. Like EV companies would be given a high E credential because they move away from something like gasoline. But it's said that the minerals like lithium come from mines and poor labor conditions, so it does badly in the S credential. Elon Musk's Tesla was set to score so badly in the S department that it was removed from S&P 500's ESG index. So, what does that make a company like Tesla from an ESG standpoint, good or bad? So, these ratings seem to be riddled with this subjective methodology. As an investment strategy, investors usually want standardized and baseline data to make decisions, and there needs to be data consistency. But they may receive fragmented information from ESG. Also, disclosures can vary across industries. Carbon based businesses like oil and gas are said to have better quality data. Other sectors like agriculture are said to have much less available data. There's something called the International Sustainability Standards Board working towards creating more clarity. Interestingly, one of the biggest oil and gas companies, called Aramco, received almost $30 billion from ESG investments. And it doesn't even seem to support ESG, with its CEO Amin Nasir criticizing ESG for not including fossil fuels. How did this happen? In 2021, Aramco sold 49% of two of its subsidiaries to some groups. Those groups created special companies to sell bonds. Those bonds got a good score in JPMC's ESG indexes, which track investment considered good for the environment. So it felt like ESG proponents were looking at fossil fuel producers when it came to energy security. And one report from Colombia found that ESG often excludes nuclear energy, which is said to reduce the carbon emissions. That being said, nuclear energy has its own downsides. Think Oppenheimer. So it really seems like ESG is both helping fossil fuel companies and cutting out nuclear energy, which is said to help decarbonization. But mainly, are ESG funds performing well financially? According to Equity Quotient, those companies that proactively embrace stakeholder diversity and ESG principles tend to be more successful. It says there's a higher stock price impact, revenue increase in EBITDA, and stronger retention. On the other hand, according to Morningstar, funds with the highest sustainability ratings receive more investment than the funds with the lowest ratings. But none of those funds outperform the ones with the lowest ratings in terms of performance. Also, could it be that ESG is being used as a cover to mask subpar financial results? When analyst expectations may not be met, companies may just put ESG even more in the spotlight. Maybe companies may try to greenwash with grandiose mission statements to flaunt sustainability credentials without much impact. One ESG wake up call was an investigation into claims of greenwashing when German police searched the offices of asset management DWS and Deutsche Bank in May 2022. Another was Russia's invasion of Ukraine in February 2022. Investment giant BlackRock is considered an ESG leader with CEO Lawrence Fink pushing for ESG. BlackRock, which was launching ESG funds to help decarbonize the economy, seemed to have then changed its stance. It had suggested a short term increase in fossil fuel output as necessary. Also, in May 2022, BlackRock stated that it would not support a majority of shareholder resolutions on climate change. Why? Because the resolutions were not seen as consistent with their clients' long term financial interests. But still, these instances don't undermine the whole movement of ESG, but they do show some shakiness in the ESG revolution. So, is the concept of ESG being romanticized? Does the idea of adding of the word green sound appealing without having any substance to it? Is it just an ambiguous and feel good metric? Will the froth around ESG run its course? It's hard to say. The premise of ESG seems to be noble: more data for better decision making through better transparency. It was about doing good and identifying how companies have a positive impact on society and the environment. It was meant to figure out how investors could do well and companies could make a profit while still taking care of the stakeholders. But maybe the market has adulterated the idea. Maybe it's being used as branding with obscure methods that are subjective. Maybe ESG is flawed, but it can be perfected. Will ESG stay its course? Will it stay a niche or continue to snowball to become mainstream? Will ESG stay in tension or will it become action on a grander scale? What do you think?